What's up, everybody? AJ Osborne here from Self-Storage Income, and we get to talk today about how much money do you need to get started in self-storage. We're going to cover a few things, and I obviously love the self-storage game, but one of the biggest reasons I love the self-storage game is because of the opportunity to get into self-storage, especially for beginners. I've said this once and I'll say it again. I think self-storage offers more opportunity for an individual to start investing in commercial real estate than any other commercial real estate asset. With that said, we need to cover some stuff before I get into examples and talk about facilities that we've bought and how we got started. So let's lay the foundation. Self-storage is a great industry. It's one of the newest real estate asset classes that there is. Self-storage really came about in the 60s, right? Late 60s, 70s, and took hold in the 90s. Because self-storage is a newer real estate asset class, the individuals that started investing in it were primarily not institutional investors. Wall Street, funds, those guys, they didn't play in it nearly as much as the other real estate asset classes. Now, when looking at the industry as a whole, this shows very, very clearly. I mean, 74% of all the self-storage facilities on the market are mom and pop or single operator owned. Why is that important? Right? Why would that mean anything to an individual? Because generally speaking, those are the best buys. And two, generally speaking, those are the ones that you have opportunity to buy. So that means inventory, right? If you're going to go play in large apartment complexes, or if you want to go play in retail centers, there's not nearly as much mom and pop operators. So that means less opportunity. So the question is here, how is this whole industry made up? And what can you get in at and where can it go? So if you're looking at getting into the self-storage space, you gotta understand that there are really three fundamental types of facilities, and I'm gonna break them down into small, medium, and large, okay? Small facilities are under 50,000 square feet. Medium facilities are 50 to 100,000 square feet, and then you have 100,000 plus square feet. Square feet is generally how we rate storage facilities, okay? So when we're looking at square footage, I'm talking about the net rentable square footage, okay? So if I have 15,000 square feet, that's 15,000 square feet that I'm actually renting out. Now, how many doors is that? Depends on if they're small, big. Obviously, 15,000 square feet of 5x5s, which is like a closet, compared to 20x20s, which are like two-car garages, is very different. One's going to take up a lot more space, and so you'll have less doors. So that can vary widely. That's why we usually don't use doors as a measuring stick, because that can skew the reality of the situation. So when looking at amount of square footage, it goes from very small to very large, up to 400,000 square feet of net rentable. That's, 10 acres or more of actual rentable self-storage. If you're in bigger markets, you can have a 6-story building. If you go into New York, you can get 500 plus thousand square feet. They can be really, really big and obviously really, really expensive. But if you go into markets like where I started, that's very, very different. But before we get there, let's go over who's renting. Why? Because this is important to understand price. Now, why would the renter be important to understand the price of a storage facility or how much you need to get into it? Let me explain. Self-storage is valued upon a cap rate, all right? Cap rate is based upon the net revenue that is delivered. So the net revenue, expenses minus revenue, right? So if I buy a storage facility, that net revenue is going to give me a certain return. That return is generally viewed as the cap rate. Now, this is before taxes, right? And before debt. So those two things taken out, your taxes obviously don't matter because they will differ. And the debt will also differ for individuals. But if you take the actual expenses and the revenue minus each other, you're going to get your net income. And then that is how you determine the value of the self-storage. It's the return on your money that you're going to get from that, right? This is commercial real estate in general. We're looking at this as more of a business, okay? We're looking at the revenue coming in, how much money I'm going to make off that. So why does that have to do with customers? Well, in self-storage, customers vary greatly. There's really three types. You have customers that care about one thing and one thing only, and that is price. They just want the cheapest they can get. Then you have customers that care about convenience. Listen, I want it to be close to me, and that's really, I want it just to be close. I don't want to go too far. Then the third one is quality. These are people that are looking for a really nice facility. The spread in what these people will pay is very large. In fact, it can be up to 3-4 times as much. Not all units or doors, right, sell at the same price in storage, even if they're similar assets, and even if they're right down the road from one another. That's because of two things. First of all, the customers they attract, and secondly, how the facility is being managed. Are they adding extra products and services, right? What's going on? All these things affect revenue. The higher the revenue, the higher the net income, the more it's going to cost, because that's how we value it, off that cap rate. So if you're looking at facilities that only are working on price, so it's a low cost to the customer, generally speaking, those facilities don't run their business very well. They're not looking at add-on products and services, so their net income is generally lower. That means that facility is a lower price. Now, we're getting into the real reason why I love self-storage so much, because what is the difference of a 10 by 10 here and a 10 by 10 here? It's a cement box. But this 10 by 10 versus this 10 by 10, the spread in revenue could be 3 times. So we made a lot of money doing this because we take the low cost ones and make it higher cost. That's for another video though, which we'll talk about our value add strategy and the spread. But let's get back to the market. When you're looking at small facilities that have a low cost of a unit, that means they have lower revenue and they're not very big, this can make prices very attractive. In fact, in my market right now, there are some small facilities that are at less than buying a fourplex, but some of them are even less than buying a duplex, which blows a lot of people's mind. They're looking at a commercial real estate asset with much more upside, yet they cost more than a regular fourplex or even a duplex in a lot of markets. This is why it's such a great opportunity. The landscape of self-storage. Will this last forever? No, I don't think it will. In fact, I think we probably have 10 to 20 years. It's consolidating. But if you're watching this now, that's a good thing because that means there's still time. 74%. Out of that 74%, a huge amount of those mom and pops compete on price. This is your ticket to success. It also means that you can pick up facilities for a few $100,000. So what drives the price of the facility is revenue, right? But size is calculated into that, not from comparables, just because you have more square footage to rent. So generally speaking, if you have 50,000 square feet, you have more net rentable square footage, right? So you're going to have more revenue if they're full. So when you look at a facility, the size, occupancy, how they're being ran, those all factor into the price. And so we see a lot of prices that are justified, but they're lower than the market. And in small facilities, we can see a huge swing in what's being offered or valued at those prices. But it's important to remember that you don't use comparables in storage. You can get in trouble doing that. Even if it's a small asset, you really need to value it on revenue. What we look at when we're looking at the price of a storage facility as far as comparables is important. I'm looking at replacement cost, right? I'm looking at what other things are selling for. But I don't buy off pro forma. This is really important. Let me rephrase this. I buy off pro forma, I don't pay for it. That's the difference. Because when I buy something, I'm buying off its actual revenue. Where you need to be really looking hard at is your expenses versus your revenue. Sellers love to minimize the expenses at a facility and love to, I don't want to say lie, but we'll say exaggerate maybe some of the revenue. So you need to do really good due diligence. Also, we're making a video on that, so that's to come. But that's a huge topic we're not going to focus on. But the reason why I mention this is it's important because remember, your net income is how it's valued. So if expenses are suggested at lower than they maybe truly are, and revenue is a little higher, those two things combined really increase the net income and add to a bigger value. So it's really important when looking at the value of the facility, we look at occupancy, right? So how much is actually being rented versus how much could be rented. A lot of people like to sell off pro formas, which we don't pay for pro formas. You need to look at the market just so you understand what's going on. That will tell you where that facility can go. And then you need to look at the quality. Okay, the quality is important because of the capital expenditures need to be put into it. Because if I'm looking at a facility and I say, this is a great buy, it's $200,000, but you have to put in $300,000 worth of work, it's really not $200,000, right? It's $5,000. So when looking at how much money you need to look at the quality. So you get the price tag based upon your net revenue, but then we got to look at capital expenditures needed. Are roofs leaking? Is the pavement bad? You have to factor all those things into it. So, how much money do you need? Well, let me show you an example of what we did and show you where we were and where we've gone and how that looked at getting started. All right, so the next important part of understanding how much money you need to invest in self-storage is the financing. In self-storage, it's a little different that it requires a lot down, like 30%. We see this in other assets like hotels that need a large down payment, and this is mainly due to the month-to-month lease arrangements. So if you think about assets like apartment buildings, they have long-term leases, so it's easy to predict the cash flow over an extended period of time. Although cash flow remains very predictable in self-storage, it doesn't take away the fact that these are month-to-month leases. So banks want to see 30% down. So when looking at self-storage, we could see self-storages that will sell from $200,000 to $500,000, right? Which requires a 30% down. So you're looking at $50,000 to a couple $100,000 on those smaller ends. Then you have the mid-sized facilities that can range anywhere from $1 million, $2 million to $4 or $5 million. And the large facilities, the same. It can be $4 to $5 million to $20 million. It varies widely due to the revenue component. But 30% down is standard and will almost be guaranteed that that's what you're going to need to do. There are several financial partners that we work with, like Live Oak Bank, that love to invest in self-storage. And they look at the asset and they look at the business plan and what you're trying to accomplish in that asset. And they go into lots of markets that traditional banks, maybe like the larger ones, would avoid. This is coming from my own personal experience, because when we got started, this is what we did. We started and we bought small facilities that were right around $600,000. So we needed to put $200,000 down, which we did. And we put $200,000 down into these small rural storage facilities. Let me talk to you about how this looked. The facility was on the outskirts of town. There was no fence, there was no office, and it was gravel road, but it was very stable. And we wanted to learn self-storage. We didn't know. So we got into it and we bought these small assets up. One of the small ones that we bought was in a very rural town in Oregon. This one, we got the owner to finance it. This is a great way to do it because then we got off of the debt. That means I wasn't personally liable because the asset backed the note. So if the asset failed, the person we bought it from would receive the storage facility back. It was also good because we got to put less down. So I think we had to put around 20% down, which was around $150,000. So there's ways that you can work through the financing, but generally that's with the owner, not institutions. And in, fourth tier markets and smaller facilities, this can be a great way to go about it. Lots of the owners, they still want to receive some kind of residual income. And so that financing can really help out. But that's how we started. Now, as we got much bigger, we did everything from convert big bankrupt super Kmarts, ground up build, multi-story. As you can see, they get very nice and very big. Now our down payments are $2-3 million instead of the 200,000. And it scales well because the same exact principles apply. The point is, with self-storage, you need to understand when it comes to value and how much money you need to put down, you need to understand where that value comes from, right? That comes on your net operating income. So how it's derived, your revenue minus expenses, and understand where that can go, right? What dangers may be and how stable those cash flows are. It also comes from its occupancy. How many people are using it? Is it 100% full, 60% full? And you need to look at the difference in occupancies and rates and how that will affect the net income, therefore affecting the value of the facility. The second part you need to look at is the financing part. So how much do you need to put down and what are the terms of those agreements? That's really how you come up with how much money you need to put down in a facility. But the range is large. But for a commercial asset, there's amazing opportunities to get into it relatively cheap as far as other assets go, and start small, but to grow really big. Hey everybody, thanks for watching this. If you've had any experience and you've bought self-storage facilities before, please put down in the comments how much you put down on the facility. That will help others learn. And if this is helpful, please like and subscribe. Like and subscribe tells the YouTube algorithm that you like what we're doing and tells us to produce more of it. So that's how you can help us as we continue to try to put out great self-storage content.